Okay, everyone, let's actually do a quick mic check and then we'll get started here. All right, audio's good. Looks like Bill's in here. All right. Well, we have quite a few more people that are coming in, so what you want to do is actually just grab a piece of paper and pen and we'll take some notes on just what we're going to cover today is chart patterns, channels, money management, risk to reward, emotions, and keeping it simple. I mean, we want to keep things as simple as possible. It's a lot easier and funner to trade, I think, if it's simple. If you're interested in like really complicating, indicators or like to get overloaded, there's plenty of websites that do that for you. But that's exactly why I created that other site for you. But let's actually just cover first. Okay, let's get started here. So, chart patterns. Now, what is a chart pattern? Well, chart pattern is considering a whole screen of candlesticks. It's not just a few candlesticks. Okay, this is like a reversal pattern of candlesticks, candlestick patterns. This is a chart pattern. It's going to consider the whole chart. So let's actually show you this pattern. So we have a trend line on the top and support on the bottom. So there's names for these patterns. In this case scenario, this is a descending triangle, also known as a wedge. If it breaks the bottom, just you trade exactly like support and resistance. You break out, retest, stop loss behind the support resistance level, stop loss above the last swing high, and so on and so forth. Trend line works exactly the same way. If it breaks the trend line, look for the breakout, retest, continuation. Okay, so when it retests, you're looking for those candlestick patterns, the reversal candlesticks. Okay, so here in this case, we're looking for a range. But if it breaks this trend line, is this going to be a ceiling? Or maybe I want to consider the origination point of the trend line. Okay, so if this is going to be more like a consolidation perspective of this pattern right now. So what we're facing right now is we do have four lines. Okay, so we had an ascending triangle right here. Okay, right around here. Descending triangle. So when we broke this bottom right here, you can see that this trade might have not worked out for you. Okay, it may, depending on where you put your stop loss. If you entered there, because this is the 15-minute chart, we're looking at a lot less information. Okay, if I swing up to the day chart or 4-hour chart, look at these support and resistance levels and see how it looks. Okay, it looks like it's just straight down. So if you look at it, we're actually only analyzing just this much data, guys. So if you're taking this, that's why multiple time frame analysis can be very dangerous if you don't understand it. But if you understand it, it's very powerful. That means that you could really get small stop losses and big take profits. Okay, so we'll kind of walk you through that. But I just want to walk you through this is that this candlestick right here is 4 hours, 4 hours, 4 hours, 4 hours. So this is almost like a whole day right here. Okay, so if you look at a day chart, let me actually pull it to the front. We're actually looking at this one candlestick, guys. So right now our temporal trend is up. You can see how multiple time frame analysis could get really dangerous if you don't know what you're doing. And so you take the 1 hour chart, and then if you look at this candlestick right here, if I go to the 1 minute chart, you're taking that one candlestick and you're breaking it down to 60 of these candlesticks. So really, someone that's actually looking at a small time frame is actually their point of view may be very small. They're really only looking at one candlestick on the 1 hour chart. Okay, but some people do really well in the small time frames, so it's a personal preference. But look at this. I mean, depending on what pair it is, then the small time frames could be beneficial. But you can see there is a breakout trade of this resistance. This is considerably like a double bottom right here. This is on the 1 minute chart. So there are like 2, 3, 4 pips, you could have gained. But again, you saw this candlestick on a small time frame, you might be scared. As you can see that these people are, there's not that much activity going on right now. It may continue going upwards. Okay, but you trade pretty much the same way that we talked about the support and resistance level. Okay. So 1 hour chart, really in reality these long wicks are really two candlesticks in engulfing pattern. Okay, the wicks are engulfing patterns. Well, let's actually look at a 15-minute chart. Okay. So again, we're breaking upwards. We don't know what we're doing. We're just sitting, and I might take a trade if it goes downwards. Okay, so like I said, this is what I would do if I wanted to automate the situation. I'd put my stop loss above that wick high, thinking that this was support, broke through. This is the retest phase, but I want it to break further than this close of this candle right here. So I put sell break. Then I'm not chasing this market. I'm not trying to push a trade in, or if I'm not around, I can take the trade because I have Magic Stick operating for me. And then I can have this be my take profit. Okay, so again, price must be above the line in order for the sell break to work. But this is a chart pattern right here. Okay, so this is actually quite some time before this market price is going to reach this trend line. So you want to just plan just one trade, stick to that strategy that we talked about, get good at one strategy if you're going to be good at trend lines or breakout trades or bounce trade. Just pick one and get good at it. Okay, so let me just clean off the chart. So if I were looking at this right now, what I look for is a buy break on this trend line on the top, which price is below the line, then a sell break on this line. Sell break and a buy break. So this is actually, again, a descending triangle. So let's actually talk about other patterns. Okay, let's talk about these other patterns right here. Let's pull this back. So we had some consolidation. So like I said, if you're going to trade like with this right here, again, there's a trend line, and that's all these patterns are made of, is trend lines and support and resistance. So right here we had, if you had this much information right here, this would be an ascending triangle or an ascending wedge, and here you have your breakout. Okay, in this case scenario, this trade just didn't do very good. Okay, if you held on long enough, it hit your stop loss. Because if you had a breakout right here, if you kept your stop loss behind this swing low, it probably would knock you out. Okay, but again, here we have a trend line that we could have taken, and we could have taken some profits this way. Okay, stop loss above the swing high. You can see the market never reached that price and dropped down. We could have taken some profits. Again, how long are you going to be in the trade? This could have been when you would have taken profits. This is a smaller time frame, so if you held on way too long, then you would have got stopped out. So this was a win or losing trade depending on how you manage the trade. But you can automate the process. Like I said, here we could have the sell break, so when it broke, that was your entry point. You would have had this much time to react to where you wanted your stop loss. You can take profits down to previous support or resistance. Here's your support, and it just was just one move that made it work. So you might have been in the trade for a little bit. You might have even got out before that, like this right here, and had this trend line like this. And you can see if you just place some trend lines, so this would be a descending wedge, In certain pairs, descending wedges and triangles are more reliable. But look at how you just want to stick to one thing. Here, if you just took a support and resistance trade, you would have lost on this trade. Here, if you would have took a trendline break, you could either break broken even, because if you would have taken profits right here at resistance, you can see that's where it was at. Here again, what is this called? Ascending wedge, because we're hitting tops. And you'll hear these names, and you can Google it. It's really easy. So you have a high right here. It's this is more of a triple top. So you have one top, two tops, three tops, meaning that it's bouncing off resistance. That's all what it's saying. Here we create, it's called the neckline, which is support and resistance. Again, let me just clean off the chart. And you want to just keep it simple as possible when you're analyzing the market. Let me pull that back there. So you have a triple top right here. You can see it get rejected, rejected, rejected. What would you do? Well, if we get rejected, then what we're looking for is the opposite direction. That would be an entry point of a breaking candle. Your stop loss would be behind this rejection point, and you could take profits at previous support or resistance. So right here it could be your exit point right here, or even right here if you're more aggressive. I mean, if you want to be really aggressive, you could actually had a line like this acting as like a trailing stop. Okay, so those are some ways to take those patterns in considerations, the wedges, the other patterns. Again, double top just means resistance once. So if the market came back up to this price, I'm looking for it to reverse, and then this would be the double top. So what's a double bottom? Well, here's a bottom right here, and if the market comes back down, this is where I'm going to be interested in the candlestick pattern for a buy opportunity if the market comes back down to this price and gets rejected. So double bottom, double top, triple tops, triple bottoms are exactly the same thing, okay, just with 3 points of respect. So the difference between candlestick patterns and chart patterns is candlestick patterns are right here, just a small group of candlesticks to reverse at reversing points. So like breakouts and retests and continuations is all you have to remember. So here we have support. Again, in a smaller time frame is a general area, so we have support here. Oh, let me pull this like that. Okay. So you see that these support and resistance levels are just really reliable. Like right here is support. Here's a place where the market engulfs. So if you want to look that up as terminology, is engulfing pattern. This is a candlestick pattern. A chart pattern is something that has a group of candlesticks like this versus this. Okay, so chart pattern is going to consider a lot more information versus a candlestick pattern. So simple money management and is just very important. If you want to only take these trades, you can be more aggressive. You just want to make sure your margin level is above 200 or 300%. U.S. accounts, if you decide to use a U.S. broker, which some brokers cannot accept U.S. clients, you have to realize that your leverage is a lot less. So, there's some rules that say 2% or is it a fixed lot size? Well, I preferably like fixed lot sizes because I'm able to just count pips, and I'm able to just keep track of my losing trades as well as my winning trades. So if I'm looking at trade opportunities that are risking roughly around 9-10 points, and I'm looking for gains about 40 points or 30 points, well, number one, my risk reward is good, and my just the ratio makes the difference in the world, as well as if I keep my trades simple like this. then it's going to be easier for me to manage like how well I'm doing throughout the week. Okay, so you got to imagine that your emotions will kick in when you're trading with real money, and that you may not, you're just not going to win on every single trade. But as long as you keep your risk reward, you understand why you're getting in, like we're showing you these methods, then you should come on top and just build your account based on pip amounts. Okay, so there's some weeks maybe slow because the market is just going sideways. Like right here we have the Aussie dollar. I mean, right here is a slow week. But look at this. I mean, yeah, one opportunity was a triple top, double top. Okay, you might have taken this trade. So there's 1, 2, 3 opportunities on the day chart. So not really that much. And this is like a week's time. But if you decide to trade the smaller time frames, there is more actions, like a little bit of like trendline breaks. Like this one was an awesome trade. My stop loss is going to go right here. Actually, I can bring my stop loss to break even. Okay, so this is where I'd put my stop loss, but you can see this thing just take off. So this was within just like one day, as you're looking for that one good trade. That makes sense. And yeah, just keep it simple with the how many pairs you want to trade with. So some of you may say, what pairs do you trade? Well, I trade a lot of pairs, but I'm very specific on what I'm looking for in these pairs. So if you're starting out, just stick with 4. Keep it as simple as possible. If you're trading live, 4 or 5. You don't want to get, especially if you're looking at a smaller time frame. If you're switching time frames or you're switching currency pairs all the time, it's going to be a headache for you, and then you might get emotional and start placing too many trades. Some of you have been asking for like a pattern recognition program. Well, there are pattern recognition programs out there. They're okay, but it's actually more reliable if you understand and just like I said, just do your homework and get a better understanding what patterns we're talking about. So right here, this was an ascending wedge or descending triangle. Okay, broke the trend line. So if it broke the low, then I would take the sell. If it broke the trend line, then I'd take the buy. And that's just how it works. Really simple, huh? Okay, guys. Well, thank you for joining this webinar and this lesson here. If you have any questions, just feel free to get a hold of us. All right, guys. Take care.